Assalamu alaikum. Welcome everyone to the analyst briefing of the second quarter results for Systems Limited. Inside Securities is proud to host the top senior management of Systems Limited. Systems Limited has been a consistent buy at Inside Securities for the last 7 years. The company has shown a massive 5-year CAGR of dollarized 33% and annual 58% in rupees. The overall growth of employees has been massive. It's from 2,400 at the end of calendar year CY18 to the last at 6,416 numbers. So it's been a phenomenal growth story both in dollar terms and in revenue and bottom line numbers. So without wasting much of a time, I would hand it over to Asif Peer to take us through the presentation that's already uploaded on the website of the PSX and will be shared here as well. Asif, over to you.
Okay. Good afternoon, good evening, good morning, everyone, wherever you guys are joining. So, pleasure to have you. And we're looking forward, as Zubair mentioned, we will just spend 10-15 minutes on the presentation, walk you through the numbers, and would love to answer all your questions or as many as we can in 1 hour. So we can start with next slide. So as all of you guys have been hearing, whichever business you belong to or whatever you cover these days, the AI and AI transformation is at a peak where every company is asking about whether it's ChatGPT, whether it's generative AI, and everybody wants to transform their business, optimize and automate their processes, creating the bots with AI, creating the natural language processing interface behind the scene. So I think this is the wave that is running, and it has been crazy opportunity globally in the data analytics and the cloud space, where people are now talking about more of AI transformation and also digital, but AI transformation in general from end to end. So of course, we have aligned, we follow all these trends, and we keep aligning ourselves with the global trends because we serve the large global markets, and we need to be ahead of the curve as a leading technology solution provider. Next. So systems, as Zubair just highlighted, we have been growing consistently, and that's been the focus, profitable growth, where we invest heavily in the talent. Talent is the key, and in the markets and the geographies and the partnerships and the relationship that what we carry. I'm proud to share, and I think we have a phenomenal leadership team and phenomenal team globally. We were able to achieve so many accolades in last 1 year, like having Inner Circle from Microsoft, which is like top 90 partners globally. So we are one of them, and this gives us a lot of repute and a lot of opportunities globally. And it is not like the first time, 3 years in a row. That shows our persistence and sustainability. It's not like one off year and that's about it. So last 3 years, we have been receiving this Forbes Asia Best Under $1 Billion Company, one of 200, again, 4th year in a row. So we are only Pakistani company who have won this accolade 4 years consistently from 2020 to 2023. Asia Money this year, we have been recognized as Pakistan's Best Country Award by independent analysts, and we are really thankful to all of you who ever participated in the survey. So we are the best company in IT as well as the best company out of Pakistan as well. So we received 2 accolades from them. Temenos has given us, core banking partner has given us a couple of accolades, the best MIA partner for the implementation and the sales partner as well. So very thankful to all the partners and principals, and especially the team that I have. Next. As I shared last time as well, we have been in this region where we are receiving, I think our hyper-growth regions are Middle East and Africa right now. Of course, the US and Europe is also catching up. We have few deals that is materializing towards the end of this year, which is a second half. But MEA, where we have the strength from the principal relationship and the customer relationship with these accolades that what we have received with Microsoft in this region, that is giving us a lot of footprint, and especially Temenos, we are the best in the region. So we're getting a lot of traction. And as you can see, Asia Pacific was the new region that we just opened, and that we started growing and getting the revenue as well. Last time it was almost zero. So that's also a progress. And of course, as we invest in these new markets, these are markets return the yields as well. But definitely North America and Europe are the key markets where we hope this is going to be a significant portion is going to increase on that as well. Next. So I think you guys have been seeing this, whoever is the repeat, but I think our value proposition right now is unique in nature. We feel so confident, and we feel so we are strategically placed where the cost effectiveness in this kind of economy plays one of the role. And cost effectiveness doesn't mean the cheap pricing, it means value for money. Like where you have quality delivery, where you have depth, where you have scale, and also the pricing. So this is like we have open centers in Egypt and Pakistan. Egypt last year and Pakistan is our core. And that is our core strength that we feel proud. I think we have been growing. We're getting talent. We're grooming talent. We are mentoring talent. We are nurturing talent. And we're getting a lot of response from the market where economy is not working and companies are like optimizing their cost and do more with less. And we are one of the best alternative available who can do more with less and give them a coverage. So that's and global presence, of course, with the regional presence, as I shared in these countries, and with the brand that we've established over the last few years, I think that is helping us because principals and partners are giving us a lot of leads and opportunities, which was not the case a few years ago. And again, all credit go to the team where we have been able to do this. This was our vision and goal that we need to be a recognized brand globally, not just in Pakistan. That is our vision, and that's what the purpose is. And we have been driving against these goals crazily, and we will keep raising the bar. And I think that will help us. Rest in, of course, employee ownership is one of the key strengths where most of our senior leaderships have partnership in the company. Rest is, I think, it's of course, as a technology company, you have to work and reinvent yourself as per the market. And we don't want to leave any stone unturned because we don't want to miss any opportunities which come. So next, Rui. So again, I think whoever is following us closely for the last few years, BPO used to be 40% low-end business. We have pivoted that, and now our digital and managed services, IT business is 97%. So from 60 to 97% is a journey we have now in a business where we can really get a lot of scale, a lot of compete with the international players. And I think that is one of our key strengths. This is one of the key strategic shift that we have done over a few years. Next. As I said, there are the few awards that we have shared, but SAP has recognized us. Microsoft has recognized us in many places. We are Pakistan's top 25 companies in PSX. We received various banking accolades award like Everest Group, Banking Technology Award, Best Digital Channel Award. So from our customers as well, and when customer gives you an award and partner gives you an award, I think it is a true recognition, and we are humbled and honored to receive that. So that really helps us in branding and getting more business. That's the key. These awards are the testimony of our credentials. So all these partnership and strategic alliances that what we have is again, this is the source of opportunities that we receive, and we have really increased the depth, so it's not like we just do Microsoft and we are a Microsoft shop. We really increases the depth to the cloud era of the world, which are the new things coming up, and all of these cloud and Salesforce and the leading technology service providers. We go deep. We in a year earlier, you must have seen SAP. We started. Now we are one of the largest player in Pakistan in about 18 months, right? So that shows that how we can scale and compete at a global level. Next. So our client composition is we have active clients have increased significantly. That's why our revenue has been increased as well. And we have now we are moving into which I shared in the last, that we want to have few $10 million plus clients. At least one has been one graduated into this. We are expecting a couple more fall into that, and few more go into the upper tier. So very, very close account management strategy that we are following, because we have 150 paying customer today, and we really need to nurture and grow those and take full advantage of this kind of a scale that what we have been able to achieve over last few years. Next. Ruhi, if you want to share the financials performance, and then we'll go from there.
Yeah, so hi everyone. This is the financial performance summary, where we have shared all the key KPIs of the company, including revenue and our growth in USD terms and in PKR as well, and the margins. So in the next slides, I'll share performance in all of the key KPIs versus last quarters. So this is on revenue. We have, in Q4, we have excluded the one-off trading transaction of C loss to normalize the numbers, and we can see the growth here. In PKR terms, we have grown by 102%, and in USD terms, the revenue has also grown by 39%. So you can see the average dollar variance. The average dollar for the first half of 2022 was 187, and this year the average rate is 273. So if I go to the next slide, where we are comparing the operating profit. The operating profit in Q2 includes a one-off adjustment for Jomo, which I have excluded to normalize the numbers, because this will not come again. And I have another slide where I'm going to explain the reasons for lower margins or a constant operating profit in USD terms. EBITDA has become a very important measure for us now, because we have some high depreciation and amortization costs because of some intellectual property that we had procured from NDC last year, for NDC last year. So if you see that EBITDA, if we exclude those amortization and high tax impact from our P&L, our EBITDA margin is also growing, and our EBITDA, absolute EBITDA is also growing.
I think I would like to add here the way the things have been measured in the service as well, like rule of 40, which is a goal ratio, which combines the dollar-based growth plus EBITDA. We have it, generally the growing companies shows the 40%, the growth plus EBITDA. We have shown 58%. So we are far off from the rule of 40, like we have fallen to the top tier of the companies where we are growing at 40% and also 18% EBITDA as well. In dollar terms, PKR, of course, it's like 100% plus, right? So that's we compare against ourselves with the top-notch companies globally, and this is how the rule of 40 works.
So the net profit in the half year, this 2023, is much higher because of the impact of exchange revaluation. But in dollar terms also, we have grown our net profit at 26%. This is revenue breakdown by geography and by vertical. By geography, Middle East is taking the lead, and followed by North America and the new entrant Asia Pac is also contributing 2% to the revenue now. So from this year, you must have seen that we have introduced a segment note by vertical. We are evaluating our segment performance by industry because the management has found it relevant to review our performance by industry so that we can maximize the synergies between our sectors and focus on each individual sector across the globe to maximize profitability and revenue. This is the currency. So this is the currency mix for revenue and cost. So 82% of our revenue is coming from different currencies, primarily USD, and 18% revenue is in PKR. On the other hand, our 66% of our cost is in PKR and 34% of our cost is in foreign currency. And this number has also increased because of the regional offices and the subsidiaries that we have opened.
We are actually at these markets where we are increasing the headcount for sales, the pre-sales, the architecture to grow the base. And because we are really focused on export-based, dollar-based growth, so we're putting investment in those markets. And this is yielding the results. As you can see, the revenue growth is coming. And once this is more stabilized, it will definitely impact positively on the margins as well.
Yeah, so adding to what Asif has mentioned, we have put in this variance analysis for our investors and analysts, where we have clearly explained the reasons of increase in costs and reduction in GP margins, lower GP margins and operating margins. So primarily it's the inflation. So it does the devaluation give us an upside in revenue, but it is impacting our costs as well, because we've had to give inflationary adjustments and compensations to our resources. The increase in energy prices is also impacting local and foreign traveling and the overheads. Currency devaluation is impacting because the on-site cost is in foreign currency, and if you look at it in the PKR, then it has to be revalued at current rates. Similarly, some of our licenses and subscriptions that are payable to the partners and principals are USD denominated. So any devaluation hits us on that, and import of any infrastructure, any fixed assets is also impacting us on cost. Then as I mentioned, the amortization of the intellectual property CMB that we purchased, that was purchased by NDC last year, was the impact started coming in Q4 last year, but this year, first half of the year, we have the full impact of amortization, and the amortization cost is $250 per month. And that's why EBITDA becomes very relevant for us now. On the admin side as well, last year we incorporated our subsidiaries in the earlier part of the year, but this year we have the full cost of our subsidiaries hitting us, including NDC, which we acquired in later half of the year. And this year, first half of the year, we have consolidated full NDC numbers. The higher admin and marketing cost is due to upfront investment in infrastructure and business development, as Asif has mentioned. And we are expecting this cost to be rationalized once we achieve economies of scale. In the operating expenses, there is a one-off adjustment of Jomo. So the company made an investment in Jomo last year, but the financial cash flow position and the future projections of Jomo are deteriorating. So management has proactively taken this adjustment in the P&L. Similarly, there is an IFRS 9 adjustment on our assets, and so there's a standard method to calculate this adjustment. It's calculated on all of the receivables. The aged receivables get a higher percentage. So these are not bad receivables. Once we collect those AR, this number is adjusted, but because of the macroeconomic situation and IMF projection of inflation, the adjustment is higher in this quarter. I have been asked this question from the analysts, so I decided to put it in the presentation as well, that out of the 2.8 billion of other income that you can see here, 2.4 billion is exchange gain. And out of 2.4, 1.7 billion is realized exchange gain. So, which means that revenue is recorded at a lower amount, and then we receive payment at a higher rate, higher exchange rate. So that goes down below the operating profit line and is recognized as exchange gain. There is a line item share of loss from associate. This loss is primarily coming from Jugnu, the investment in Retailistan Jugnu, and the share of loss that we have been absorbing since 2021, it has completely offset the investment now. So no future or further negative impact is expected. But EP Systems, a share of loss from EP Systems is expected to continue for some time. Finance costs, again, this is increased because of the KIBOR and SDP policy rate, which is continuously increasing and expected to go up again. In taxation, we all know because of super tax and taxes imposed on some export, on systems export revenue as well, which was previously tax exempt. So if you have any other question on the variances, we will take the questions later after.
I just want to add a couple of things here. I think as Ruhi mentioned, these are a few one of the costs, and nothing like IFRS 9 impact, and these are going to be recovered. The costs are the higher revenue in those markets where we have invested the sales and pre-sales upfront investments, that the volume of our revenue is increasing. So that is, the ratio becomes better as the revenue goes up with the same cost or similar cost. And yeah, we have increase in finance cost, but of course, on the other side, managing the dollars well give us the exchange gain as well, so which is significantly higher than finance cost as well. So which is I think all of these things which we are very confident from the numbers perspective, whatever the strategy, it's not like one-off or something like that. It's a strategy that company has thought through, that to receive that kind of a scale, what needs to be done, and once the scale is achieved, what can be the change. So we are very optimistic that these explanations, that's why we put that these are few of the one-offs, few of the things that will continue, few of the things, efficiency gains and other stuff will come as we, as Rohit just suggested, that we have invested in, like in this type of an environment, we have to be ready. Organization needs to be ready with bench strength, because in Pakistan and the country where you live, you need to adjust yourself. If you don't have the bench, if there is a turnover, if the people start leaving, a little bit of turnover we receive as well. We are part of this ecosystem, so we need to be ready. So we need to put extra cost and extra bench to make sure that we are ready. We don't lose any customer. When customer needs resources, we have those resources available. And this paid off. Like, we have signed a couple of good deals where we have the resources readily available. Now they are billable, which they were not billable before. So I think it's overall, this was a little bit of explanation, a little bit of correction from our side. And of course, we will answer any questions that you guys have. Next, Rui.
So there's some...
yeah, I think we can skip.
Yeah,
but this is our core ESG. We're very, this is like any good company. We have been following very carefully ESG, and we are doing certain things which really help. The way forward, I can just complete in a minute or so. I think, as I shared earlier, skills and service offering in our business, this is the key. We have been continuously investing, and we will continue to invest in the leading technology, even though it increases our cost, but we need to be ahead of cutting edge technologies and start building the scale to the next level. These verticals are paying off. That's why we started showing you the BFS and telco covers more than 50%. It will go about 60% or so in the future, because we are investing. We are heavily focused. It's not like a spray paint approach. We're very focused, diligent, and building the assets, accelerators, solutions the door openers for us to get foot in the door of these large banks and large telcos, where our goal is to have annuity-based business, recurring business for years and years to come, long-term contracts. So very confident in the strategy, and it is working out. I'm glad to report. Of course, geographies, we have opened too many together. Last 2 years, 1.5 years especially, we're working crazily and opening up all of these geographies now. This has been done, and now we will double down on wherever we are. Like Saudi is one of the prime example. Where huge opportunity ahead of us. So, and many other markets and geographies that we have. So, in inorganic growth, of course, whenever we see something, we will. Okay. So, capital, investment opportunity, talent. That is the key for our success. And so far, that has been the mantra that works. Diversification into different locations. Egypt is one example. M&A, we are actively seeding opportunities, but we can't just burn our hands by just do the M&A for the sake of it. We really want to have an M&A which really adds the value and have an like hockey stick type of an impact. Strengthening current geographies, I already told, a new service offering like AI, generative AI, anything that new comes, or anything that we feel there is a depth needed instead of the width, we will create the depth into those offerings and create solutions around that. Okay. So I think these are our priorities, and I think it's very clearly spelled out. But growth, and export is the key. Okay.
We can move to
Next.
the Q&A now.
Yep. So I would love to answer any questions that anyone has.
Now, I think firstly we have a couple of questions there on the chat, on the Q&A front. So we will first take those, and towards the end, if there is any other thing, we will ask people to raise their hands and ask the questions that you have. Okay. Feroz, can you please ask the questions that are already on the chat box?
Okay.
I think the first question is, which vertical do we expect to see growth in North America and Europe?
In North America and Europe, we are seeing the growth in retail and CPG vertical largely. That's where the growth is coming. We are active in pharma as well, and also our insurance vertical that we have invested recently, and that's what we are seeing the growth as well. But largely retail and CPG customers, that's what we are getting, and that is our core strength. We have the solutions around that, and this has been now, especially the CPG side, has been picking up. So, Rui, you can read the questions here.
Yeah, so the next question is regarding investment in Jomo, Jugno, and Retailistan. So the question is that what is the motivation behind these investments? And what are the targets and milestones where these companies had fallen short? Why did we write off these investments? So it's just a general question on the investments that Systems has made.
These were the investments we have done. Of course, we have deliberated at those times where the startup ecosystem was really booming, and in Pakistan, and all the companies were really attractive. The business models where we saw the synergy with Systems, they were all aligned with our strategy. But unfortunately, what happened is our committed investors who have committed the investment. Startup requires investments, right? And investments didn't come through because of the conditions that we have in Pakistan recently. So when investment didn't dry down, we of course we as a public listed company, we do not want to take more and more risks, and we just thought that it's better to part away until and it's not like Jomo, we have e-commerce is a long haul, but Jugno, we pivoted. It's not closed down. We were asset heavy. Now it is asset light company. technology is there, and it is not, we just not like bankrupt or anything. It has cash. This company still exists, and it will continue to work, but in a different format. And I think, but definitely we are now more focused from our strategy perspective in B2B acquisitions, where like NDC type of an acquisition, where it adds direct value to our business model. And that type of acquisition, we know how to run, how to grow, how to do. And I think this is where we are focused right now. And we're not like right now, unless and until there is a great opportunity in startup, I never say no. But our focus is on the other side.
Okay, the next question is why admin and distribution expenses so much, and will this space continue?
I think we have explained in the variance as well, and I think the percentage, in a percentage term, it will keep going down as we keep growing the numbers. But we have explained the reason that why admin expenses, like there are 3-4 explanations which we provided, that NDC, the subsidiaries, the one of them is the subsidiaries that were not operational, especially the NDC last year was not there. And in second half, we acquired that. In the first half comparison, you see the difference, right? So we already explained that clearly in our presentation and the variance slide as well.
Is super tax only charged on local income? What is the tax rate on the company's export income?
Tax rate on export income is 0.25%. The super tax is on the local income, and there is some
export income both, yeah.
Export income both, you know. So it's a formula that was there. So
because
that is
because we had a tax credit last year available on exports. So last year we did not have an impact, like the companies did not take an impact of the super tax on exports last year, but this year we have the same impact on the super tax, is same on local or export income. It's 4% for us.
And this is a phenomenon witnessed across industries. So any companies that are earning from the export sides all have been charged higher tax rates.
Yeah.
The next question is, I understand IFRS adjustment is not one-off, but will continue to grow as company signs up more revenue contracts spreading over the years.
No, it's
IFRS.
Sorry, go ahead, Rohan.
Yeah, I was just saying that IFRS adjustment is definitely not one-off. It's a continuing adjustment. But what happens is that when we make recoveries from our customers, or if any receivable is aged but we get recovered, so the adjustment is net off. So it's a continuous calculation that a company does based on the new AR that is recorded and the collections that are made from the customers. And so the accumulated amount gets adjusted.
So our goal is to, in this environment, when your DSO is improved, this goes down so automatically. So we are very focused on that as well, looking at very carefully that how we can minimize the impact. As Rui mentioned, that it's not like it's just a provision. It's a recovery is going to be there. It's not like a loss, right?
Admin cost Q1Q has moved from PKR 785 million to PKR 1059 million. And last corporate briefing session, it was said that all the admin cost has incurred and we will not see increase, yet it increased by 300 million. How much more escalation can be expected in this component? Also, how much of admin cost is USD linked?
I think this has already been taken in the live session as well, that the impact of the impact in the admin cost is because of the new subsidiaries, obviously, that are fully operational this year, and there is being spent on the development of infrastructure for the subsidiaries, for resources. So as we grow and settle down in those subsidiaries or in those markets, this expense will obviously not increase at the same rate or in the same proportion. And as the revenue grows in those markets, then the percentage of admin expense as a percentage of revenue will also come down.
Okay.
Can you comment on the your investments in Jomo, Juno, and Retailistan as to what is the motivation? I think that's already
This
attended.
is answered, yeah.
Um, aren't export-oriented firms that's also attended? Um, what's going on with the US and the EU markets, please? I think people are seeing the kind of growth in the Middle East, and they want to know what's happening in those markets.
I think, as I said, that we, as a systems, we became a regional brand. With the acquisition of Temenos business for all the NDC was in MEA region before as well. There was no Europe or America business with NDC. So all this fall into the MEA as well because it was the subsidiary that we acquired, and this is strength in our region. And of course, and Temenos, the partner and NDC was in the MEA region as well. So that helped us in growth and all the telco business that we had also in the MEA region. And of course, from US and Europe perspective, we had a few opportunities that slipped off. We couldn't sign in the first half, but second half, we have matured few opportunities that we have signed. And generally with this, generally the US and Europe economies and the companies that are in a slow decision making, at least when the waves are tide. And I think this is what was the reason, but it's going to be improving from where we are today. But again, the MEA region has been the fastest growth region, so it's not going to stop there as well. It will continue to grow. So we are not in the race. We need to see where we are making money, where we're getting business. And of course, we will focus on all the regions. It's not like lack of focus or lack of direction or lack of strategy. It's, as I said, like we're getting a lot of opportunities in this part of the world with our brand, which has been very well established. And we are, of course, in US and Europe, you are a small brand. In this market, we are the large brand, right? So once we reach at that stage and scale in US and Europe, of course, this type of cycle will repeat there as well. But right now, in these smaller markets, as compared to US and Europe, we have been able to establish ourselves as one of the very well-established regional brand.
You're on mute.
Sorry. Management personnel remuneration is 24% of GP, which was 17% in previous year. How much remuneration is decided and why this is too much?
It is not too much. It's hard to answer like this generally, but of course, we are hiring a lot of management leadership staff. When you want to grow, you can't grow with kids, right? So you have to incur the upward management cost and hire the GMs, hire the architects, hire the pre-sales people, and put them in the markets. Where targets marketed you in this today's world, you can't just a general purpose salesperson can go and sell anything. You need the industry experts. You need, and everywhere it's inflation. It's not like Pakistan has an inflationary pressure. It's like US, Europe, every country has this problem right now. So nothing is cheap. So once these investments are in the leadership and the management, which is our core strength for the growth and the core ingredient for the growth, we will continue to do that because that's a core growth driver. And these are the best people, and I'm proud of those people. And I think they will earn, and they are the contributor for this 40% type of growth, right? So,
and to add to this, I think a few years ago when you started the Tech Vista subsidiary, I think initially there was a significant amount of cost added, and obviously the revenues come out at a later stage. So
this happens in services business. This is the cycle of services business. You can't just open and invest and you start getting the return on the tomorrow morning, right? So that's a cycle every company goes through. You have to invest for this hyper growth type. So we have, as we have shown in the slide, the 39% dollar-based growth came because of this strategy. That we're now our base is stronger. We have clients where we can sell more, cross-sell more, upsell more, and having 150 active clients give us a lot of confidence that we will be able to have a recurring revenue, and also we are finding new customers globally. I think I'm super confident that it's really.
Okay, why do you maintain short-term borrowings despite having sizable cash balance?
I just shared that, right, in my presentation when Rui was explaining the variance. You guys have seen 1.7 billion exchange gain. By law, we have to retain 35% dollars. So we have retained 35% dollars from our export proceeds. And we had short-term borrowing. You see the 400 million versus 1.7 billion. So 1.3 billion net gain, right? So that doesn't happen without the proper management.
Since you are planning to slow down operating expenses for international investments, how about allocating some capital for share buybacks? This is a favorite question these days for everybody.
No, I think why the shares buyback is the favorite question for all of us, because the companies have no avenue to invest. We have tons of avenue to invest. We are growth. We are growth and growth. So we have tons of avenue to invest and grow our base. We do not want to buy back anything, right? Why would we? We would rather invest and grow faster, furious, and acquire more companies. Companies who do not have the avenues, they will buy back and have more control. We don't need control. We would rather have our shareholder have control, right? We perform, right? So it's a very different philosophy with growth mindset versus a fixed and traditional mindset, right?
Okay, Stability AI CEO predicts there won't be any need for programmer in 5 years. What are your thoughts on that?
Now, we have seen this question for every 5 years, right? Everybody predicts that IT will change the game and the AI will, and digital transformation, nothing will happen. Actually, what's happening is right now there is a shortfall. A lot of programmers are needed in the world, right? In Germany, you look at the 100,000 open positions. Wherever you go, everywhere there is a talented people scarcity. What AI is going to do is going to increase the productivity. When you increase the productivity, you narrow down your shortages, right? So definitely AI is going to increase the productivity of the programmers, of the developers, of the working business people as well. You can't have 200 people typing and data entry, right? What they are doing, 200 people, it should be done by 100 or 150 people, and similarly the programmers. So it's not going to eliminate anything. It will improve. It will change the way we work, and we as companies and human being needs to adopt and accept this change and change our way of doing things. If we can't question ourselves, then of course we will be just the slaves.
Okay, now this is one of the good questions in my opinion. There was a question now, I think it's move up first. Basically, he's asking what are your thoughts on the recent brain drain phenomenon in Pakistan?
Yeah, I shared in my slide as well. Specifically, I touched upon that point as well. Brain drain is going to happen, okay? Accept this is a reality. If you don't accept the reality, then you can't fool yourself, right? What you need to do as a company, that's why I said we are hiring bench, we're keeping bench, we are stopping and retaining our own people to our own companies. That's why we have companies in 8 geographies for this reason, that I don't want to lose any key person to any of competition outside of Pakistan even. So we move people to other geographies. You have seen the increase in cost for the reason, right? For the foreign currency cost. So the talent, this is a talent game. You can't lose your key people to a competition even in Saudi Arabia, right? So you have to hire for the bench. Everyone needs to be prepared, not systems. Today, it's not like chartered accountants are going as well. The banking managers are going. That's fine. It will happen. You can stop. But what you can't do, you just prepare for it. And we are preparing ourselves.
How much more taxation have you been subject to in the recent budget? Super tax from 4% to 10%, gains in it, export tax.
I think to be honest, this is nothing. Tax is, if you look at the bottom line taxation, IT sector is blessed with almost zero or non-existent. Like look at the percentage of tax. Other companies pay 29%, banks pay 50%. We are just paying fraction of percentages, right? So I think it is immaterial because we are doing a lot of export business, and it is about 82 to 85% export business, like which is 0.25% and a little bit of super tax. I think in this economy, paying back a little bit to the government doesn't hurt. So I'm really not worried about it at all. And it is not a significant impact in any case.
Margins in the Pakistan business declined substantially over the year. Can we expect it to recover in the second half of the year?
It will, but it's hard to be with the other geographies because all the contracts we have signed a 5 years contract in rupees term, few of them, right? Not everything in Pakistan traded as dollars, right? We have tried to secure Pakistan dollars that contract in dollar as well, but there are a few contracts which are rupee based as well. And what we have seen significant depreciation. So I think Pakistan is a different kind of a motive, as I have always shared. We need to do this business and keep it at a certain percentage, like 15% or so, to train our own people, to experiment, to build the solutions, to sell the solution in this local market, because Pakistan has a huge advantage of scale. Anything that we develop, we can test on hundreds of millions of people. The banks of 50 million account or whatever, right? You can't find in entire world. So this population advantage and experimentation advantage is nowhere available. And we will continue to do that. So margins will be here and there. But of course, we try to improve upon every quarter, every month. We look at very narrowly wherever we have a space, we will improve. But our game is export, right? Can we train people and can we take them out? And can we build more export business where we make more money, right? And dollar-based, that's the key.
And that's good to hear that we can test market something on the Pakistani market. Okay. Here is another one for you. It says that for the period ended 2023, bottom line is 4.8 billion and the exchange gain is 2.3, which is roughly half. The previous year, same period, it was 2.8 and 664 millions. So the bottom line is flat almost. Do you think exchange gain saved us from showing decline in profit?
No, I wouldn't say that. Rui showed you the number as well. We to be honest, how we measure our performance. We measure our performance as a company. I only measure at operating profit level. So I don't look at, this happens, exchange gain management. It's not in our hand in any case. Whatever is not in your hand, you can't manage and measure your success or failure based on exchange gain or loss, right? Our goal is we need to be operating efficient. We need to be billable efficiency. Whatever is in our control, we need to manage that. So if you see an operating profit improvement, then we should celebrate. If you see the net profit because of exchange gain, I don't celebrate either, right? So it's just there, right? So we really focused on our operating efficiencies, operating profit margin, which is in our hand, which we control, we drive. Rest is, of course, it's not in our hand in any case, right? Nobody's hand, actually. Interest rate goes up, it goes up, right? What can you do?
Okay, the next one is Pakistani segment has turned into a gross loss-making segment. For many quarters now, there has been barely any revenue growth either. Is the company not focusing on this region anymore?
Pakistan region, you should be happy, right? No, we are focused, but as I said, our focus is there. It's not about the focus. It's about where you put your bets, right? Where you put your best people, right? Export in today's economy, in today's world. Why wouldn't we be, right? We have a huge opportunity for global. As I said, I'm so optimistic, super optimistic about what we have built and what companies need outside of Pakistan as a best alternative. We emerged as one of the best alternatives for various neighboring countries. And I think that's the brand power we have been able to do it. So super confident that this strategy will continue. And I think in today's environment, the dollar-based strategy is better than the rupees-based strategy in any case.
By the way, I was going through the NDC Tech's Facebook page, and there was something that I really liked very much. I would like to share it. It says that we provide Saudi Arabian banks with a meticulously crafted country model bank framework, precisely customized to align with the distinct requirements and the regulations set by the central bank of the KSA. Read the white paper. I think probably it's one of the very few comments that I've seen on your social media, which is focused, country focus, cluster focus. So, are you seeing loads of
You,
opportunity on this vertical in Saudi Arabia?
no, I think you guys have missed probably. Let me reiterate and repeat. We have invested $15 million last year. That's why you are seeing amortization of $250,000 per month. We have the first right of refusal on the 7 countries. So Saudi is one of them. We have bought this country model bank rights from Temenos that we are the first. Any new deal happen, it will go through us from that perspective. So 7 countries, Saudi is being one of them. So there are 6 other GCC countries where we have built this asset. That's why I'm super optimistic. That's why you're seeing the MIA growth, right? And this BFS sector. And since we have bought this recently, we are building these country model bank as we acquired these licensing rights. So we are building that in last year. This was all in development phase. Now we're taking this to market. In all 7 GCC countries we have, including Pakistan being one of them. So, and nobody has this, right? So, and nobody will have, because we are the only one in these 7 countries will have that, right? So that's why we invested that kind of money, right? So that's why right now you guys see amortization, but once the volume picks up, this amortization will automatically offset.
Thank you so much. I wanted to, this was an intentional question that I asked. What's the management's take on the business in the US region as growth has slowed down over there?
We are all focused. As I said, it's not like because of lack of focus or anything like that. I think the business, the sector that we were very deeply indulged, like retail and CPG, retail sector was like a little bit of hand tight, like when there is an inflationary pressure and so on and so forth. You guys know in US and Europe as well. It's not like just Pakistan has this inflationary pressure. They had as well. They also have a rising interest rate and mortgage banking BPO, which we used to do, which was a very profitable business and very, as I said, like 40% of our business a few years ago was BPO. It has been now 3%. So with the interest rate has risen in US, which is everybody knows, the BPO business, the loan origination and services business has been dried down at least last few quarters, and we don't see that it's going to pick up either in the near future, because the interest rate is not like going to decline sharply. So I think these were the reasons, but these are not the excuses. We have focused, and I think all of the whatever we are learning in the Middle East and Africa, I think we are also now taking this to Europe. Like BFS, as I said, has no, Temenos was not there when we acquired. Now we're taking this skill set to the European market first and then to US. So Europe is relatively easier from Middle East, Africa, relatively easier to penetrate, right? From even Middle East to buy another region. So Europe, there will be uptick, and then US definitely in parallel or to follow.
Okay, the overall gross margins have picked up and improved to 28% this quarter. Can we expect gross margins to reach levels once again above 30% like they used to be a year ago, or these GMs are sustainable levels?
No, I think GM will improve. I think let's look at this, right? I think it's a strategical question. It's not like a 1%, 2% here and there, right? I think, as I said, like globally, investors look at the gold ratio, which is the rule of 40, right? Even your EBITDA is 0 and you're growing at 40%, investors treat this the best companies, right? That's how the investor treats, right? Investor looks at it. We are making profits and trying to maintain that kind of a growth momentum as well. As we all know, the growth requires investment, and of course, cost of revenue goes up. When you have the bench, you build upon all of these things. But we are very positive. We are improving all the efficiencies, whatever we can. controlling all the cost element, but we're not compromising the growth strategy. The growth is going to be there. So if plus minus 1-2% here and there, in absolute terms, it will increase because their top line is going to increase, but in percentage terms, plus minus 1-2% will not affect if the growth is there.
Okay. It is good to see client relationships increased on net basis to 150 now. Can you share gross numbers also in terms of additions and terminations of relationships?
I think we have shown additions like about 50 odd clients we have added, 45, 50, if you look at the numbers from 110, 100 something to 150. So there is an addition for sure. Deletions, I think I'm very proud to report. This is the company that we're proud of, and that's what I'm proud of my team and leadership team. I really even remember that we lost the customer, right? Ever, right? Rarely happen, right? So customer centricity is our core value. We deliver value to our customer. Once they're a customer, we convert this into partnerships and the relationships, and we keep growing. That's why we're growing. There is no other mantra to grow. If you leave your terminate your customer and get more customer, that's not it means you are doing something really bad, right? So I think we really focused on that strategy, investing more on account management to cross-sell, upsell within the existing account. So you will see additions, terminations, or deletions should not be there, but if there are 1 or 2 here and there, it's not in my notice, to be very honest.
Okay. Any further stress on the invested companies, which is hinting on one-off losses going forward? This is a question from Kareem. I think you've mentioned on EP systems.
Yeah, EP system will continue because again, this company is going through this is the sustainable because it's one EP system you guys are seeing for long now, right? So it is right now with the digital banks coming in Pakistan with our EMI license fully activate where we can do cash in and cash out. Digital banks can't do cash in and cash out, right? So they would need us. They need all these micro retailers. So we have been partnering with all of them. They would need us for sure because they will go to traditional banks. Banks do not lose their competition, right? Because they compete with them. So we are seeing a lot of financial services revenue. But since we are investing again aggressively in the license and the team and everything, so we'll have a little bit burn. But burn is sustainable burn, not like the burn which we had in Jugnus and others, right? Which was a different kind of a strategy. Here, since we have a mature and company, like for many years, we have gone through the cycles. So it will continue, but not major. I would say it's not like, it will not be material. That's what I would say.
Okay, there's a question from Murad, an old friend. He's put up 2-3 good questions, in my opinion. The BFSI segment net margins almost halved versus last year. Is this essentially a reflection that NDC's business is a relatively lower margin business compared to systems digital business? Should we expect similar margins as in first half 2023 to sustain in the BFSI segment?
I think we answered this question because EBITDA is higher than what we sell, but since we are accruing the amortization for the CMB and investing in this country model bank that we acquired, so that's why it was under stress. It will improve as we keep selling this country model bank, which we acquired the rights and we have developed for a few countries already. So it will improve, but EBITDA is higher than us or equal than our services. But yes, once you include this amortization, then it is low. That's why Murad is seeing that. But yes, it will improve as the simple answer is.
Okay, can you also elaborate, if you don't mind, on which country-specific operations you started specifically because of this NDC's business that you started, the license that you...
None.
These were all present before?
Yeah, yes, and we don't have to start the country for that reason, right? We can sell. It's a GCC country, so if you're UAE, if you are in UAE, Qatar, Bahrain, and Saudi, you can cover pretty much all GCC, right? So
Yeah, my point was basically, obviously, if you open a new geography, you incur a certain level of cost right up front. So,
not because of
for,
PFS. We opened because of our business, right? We opened
okay,
Malaysia, we opened Singapore, we opened Australia, and we APAC region. You start seeing 2%. It was 0% last year, or almost 0%. So, and Africa as well, South Africa and other in African countries, we are investing in sales as well. Where it's not necessary to open an office, but you have to have a people boots on the ground or a branch office strategy. Wherever we can open a branch office, we are opening those as well in Africa. Africa is pretty big, right? And it's again a huge opportunity. Like Middle East, we have literally very limited revenue from Africa. We are seeing a great opportunity as well in Africa as well, because there are very limited partners, and we are very well positioned.
there's another question from James. He's asking what are the learnings from the failed investments in Jugnu and Jomo, and how will this impact your venture investment strategy going forward?
I think in Pakistan, the startups are difficult, especially right now in this environment, because most of the startups are earning in rupees, and what happens is that when there's kind of inflationary pressure in this kind of environment, most of the startups are struggling because they can't get the proper funding, because the funding environment is also struggling a little bit in our country. So our venture strategy, as I explained earlier as well, it's a B2B business. We are looking for the companies which can strengthen and complement our B2B skill set or the markets, so we can continue our growth strategy, and we do what we do best. What is our strength, right? We play on our strengths versus experimenting on startups. But again, if there is a great opportunity, we would not hesitate. But the focus and the strategy is more towards what we know best. That's a learning, right? So if I say,
Yeah, there is too much talks on the SIFC and the technology vertical in the SIFC. So there's
doesn't
a
matter.
question: any plans under the SIFC umbrella?
We should. I think we, as a good company, we don't need much, to be honest, right? As I said, a little bit of Texas is not going to kill us. I think only thing we are focused, and I think what my input always being, we have to create the brand image of country, like we are creating a brand image of the company, that a lot of people don't know what Pakistan can do in technology outsourcing. We are one of the best, well-positioned country with this cost effectiveness and the skill set and the people and the talent that what we nurture and we build. We have the best talent in the world. Quantity is limited, so I think we all need to well position our country, whether it's SIFC or IT or we, all of us as professionals. We just need to be positioning Pakistan better, because that is our strength.
This is one in response to something that you answered on buyback. On buybacks globally, Apple is the largest company in terms of buyback, 100 billion per annum in dollars.
We have not reached there.
Okay. So here's the point. He's a valid point. It is also one of the fastest growing. Capital structure decisions need to have more holistic view in order to determine which is the best way to reward shareholders between bonus, dividends, and buybacks. This comes from Asim Khan.
Yeah, I think right now we really want to reinvest in our growth, right? So we have a lot of opportunities to reinvest in the growth, and that's a return that shareholders get as well in terms of in the growth-oriented companies, people don't count dividends, right? Growth-oriented companies are the growth-oriented companies. Dividend-yield companies are different kind of companies. They don't grow. They grow in single digits, and you can get and happy about the dividends, right? So bonus or share buyback requires cash, and if I, as a company and as a board, I think we all believe that we have the opportunity to keep growing and keep investing in the business. That's the best strategy. So that's what we believe. And share buyback can happen when we reach at that level where we have a lot of free cash and we don't see there is an avenue, and we can just, instead of giving dividend, we can buy back or whatever. But I think we are, as a part of a policy, or I would say as a part of precedence, we want to give dividend according to our precedence. We continue doing that. And I think, as I said earlier as well, I see enough opportunities in the growth versus buyback. The shareholders will not get the benefit of buyback versus the growth.
So this is extensively discussed at the board level, right? This is basically.
Of course. Why? But you guys can figure out. Everybody's intelligent, right?
Asif, there are a lot of questions around KSA and Saudi economy and our business plans in Saudi.
Yeah.
I think
The win that we have, the contracts also.
One more is also there. Would you be open to getting acquired or strategic stake by, let's say, Saudi Solutions? Given the state of the Saudi economy started to slow down in growth, and that present a risk to the Middle Eastern segment, especially 57% of the revenues coming from that region. Isn't there also concentration risk? Yes.
Saudi has slowed down. I think Saudi right now, if everyone knows and follows Riyadh, they are crazily spending money on everything, but IT especially, and they want to be the best in anything and everything, right? So wherever we go, if we say that we will do it tomorrow, they want it yesterday, right? So like the closures and the business deals happening at a speed which is unbelievable and unprecedented. So Saudi is growing. Concentration risk, I think it's not like one customer we have or one vertical that we work for, right? We're working in very core verticals like banking, telco, private sector, public sector entities. So yes, and that's why there's in Africa, it's a Middle East and Africa. So you're just looking at ME, we can separate out Africa if it requires. So we're growing, we're pushing Africa, we're pushing Europe and North America, we're pushing APAC. So I don't see that kind of risk because we are very well diversified from horizontal and vertical and also geographical perspective. But Saudi, in my view, I think, at least I don't see with their vision 2030, until 2030, things won't dry down. After 2030, we'll see what happens. But we have a clear headwinds for at least next 5 to 7 years. And I think that's good enough for the planning purposes for any business, right?
So, and in continuation, there is another one. How significant can Saudi be as a percentage of revenue in a few years?
Honestly, it's very hard to predict, and I think it will surprise us as well as a company.
Please share some outlook on the Pakistan vertical. I think we've done this. Are there currently any AI offerings that generate substantial returns? I think that's okay. This one is interesting. Does systems plan to have its own IT university soon? It might solve HR issues.
We have started. I think whoever follows us, I think we are not calling it university, because when you call a university, then you come under MBIT, right? Certain regulations. We are doing the diplomas, vocational training, IT Mustaqbil programs, training a lot of people, hiring a lot of people. So we are using asset-light model, like Uberization of training, right? Where we are not building the brick and mortar, we are utilizing the brick and mortar of the institutes free of cost mostly, and train the people. So that's the concept we have innovatively adopt. And we have started and it's working, and we have hired from those. So yes, and I'm encouraging, not systems can't do, and we should not rely on government to do. All the companies, I've been saying in every forum that all of the companies should adopt these programs and train hundreds of people. If we all start training as an industry, then the ecosystem will be there. It's not systems' responsibility or government's. Government should do in any case, but if not, then we can't stop, right?
Okay. Okay. This comes from Shoaib, Muhammad Shoaib. How many people are you training per annum? And what is the length of the training cycle?
It's typically 6 months. How many depends, I think about 1,000 odd people in a year. So,
Means
but
6 months. By 6 months, what do you mean? At the university level, or there is another initiative of the
no,
IT
this
Mustaqbal?
IT Mustaqbal is 6 months program, right? So that's where we produce people. We whether they are whether they are coming from maths background, say for example, because
So this is
that's
separate to the university, the IT Mustaqbal initiative?
no, IT Mustaqbal has nothing to do with the university, right? This is whoever wants to join. We select those people who have talent, their critical thinking capabilities, analytical capabilities, and they have some mettle to an attitude to learn and
So,
training.
can you give a number on that one? And secondly, what do you plan, or where do you see that number growing to in over the years?
I think it depends on the supply side pressure. Right now, as I said, like we are not feeling that supply side pressure that much. It's whatever demand we generate, we are able to fulfill, and we are training extra for our future as well. So, but I think we need, ideally, we should be training thousands of people. But I think we have started with like 300 people last year. Now we will take it to 600, 700 people in this program, and then we slowly and gradually increase because we do not want to overdo anything which we can't even handle, right? So we're very cautious from that perspective, and we match the demand and supply and do the forecasting, and then figure out what kind of a supply and what kind of a skill sets they're not there, and we need to train them right. So,
Okay, then, and another one is, where do you see the employee count growing to in the over the course of next 3 to 4 years? You've come up a long way from 2,400 to 6,400 at the end of this quarter. If you were to look at Systems Limited from a 3 to 4 years perspective, what is the ballpark number you have in mind of the employee count?
I think that answer will be directly proportional to giving the forecast future. I think that's what we really
You can
discourage.
always earn more dollars per
Yeah,
employee.
but I
So
think we would definitely, I think if we want to always outpace ourselves from the growth perspective and get the challenging target, so we will keep growing. I don't see any reason why not. So, but I think you guys can do the math and figure out based on the historical numbers.
that was my personal question. It wasn't put up by anybody else. So I think we have mostly done with the questions. If there is anything that I have missed out on and anybody would like to flag, please do so. But it's mostly done. Uh, I think that's about it. So on this note, I would like to wrap it up. Thank you, Asif. Thank you, Tahir. Thank you, Ruhi. And thank you, each one of you, for taking the time out and being a patient listener at this second analyst briefing of Systems Limited. If there are any follow-up questions, you can reach out to us, Inside Securities, or the management of Systems Limited, and we would be happy to answer. On this note, I would like to thank you all and sign it off from here. Thank you so much.
Thank you,
Thank you.
everyone.
Forward to see you again.
Thank you. Bye.
Thank you.
Thank you.